Hello and welcome to Big Deal. Now, as the year 2022 really comes to an end, today we are going to focus on the year that was for the deal street, the key highlights there, and then also crystal gaze into what's coming and picking up on the key trends for the next year. And to delve deep into it and give their perspective, I have two top deal makers of the country. Let me welcome on the show Manisha Girotra, the CEO of Moelis India, and Zia Mody, the founding partner of AZB and Partners. Ladies, always a pleasure to welcome you on CNBC-TV18. Welcome. Zia Mody, since we spoke last time, a lot has changed on the economic front, the perception front, but our market has been quite resilient with the equity markets really hitting record highs. On the other hand, also the deal street has been buoyant. How do you summarize this particular year?
God is kind. Certainly the situation with Russia and Ukraine and the whole disaffection, if you like, with China has had only one beneficiary in that sense, which is India. So I think that the deal outlook, if you like, for the next year, it won't be bad, but it will be slow and steady. I think what will make it a bit slow is the valuation reset. It's happening, but it's happening, as you can imagine, slower than we as intermediaries would like to do deals, because the promoter has been used to higher multiples. He is to understand the world has changed. The global sentiment is not as enthusiastic for themselves as we are about ourselves. So I think, not that much to worry about. In a way, it's ours to lose with the China plus one strategy, with people really looking to come to India. You look at the iPhones, etc. So I'm not pessimistic. I'm not, saying everything's going to be a gangbuster. But I think if India does the right things and holds its own, it's ours to lose.
All right. So cautious approach there from Zia Mody, and this is one of the few times that I've seen you more cautious, Zia. So Manisha, what do you think? Of course, on the deal street for this particular year also, in terms of value of M&A, if we really dig deep into the numbers, if it was not for HDFC and HDFC, bank merger, which had been imminent for quite some time and was quite a bulky transaction in terms of numbers, apart from that, the value for the deals has been similar to the last year, which was a more difficult year. How do you summarize, and how much business are you really expecting for the next year?
Thanks, Nisha. I think just to add what Zia said, while God is kind and I think India stood out in terms of growth compared to the other countries, I think also we are benefiting enormously from the structural reforms that we undertook in the last 10 years. And the reforms that we're promising to undertake in the next 10 years. So I wouldn't be, while I'm cautiously optimistic, I strongly believe that India will attract a lot of capital just because of what we've done in the past. And I'm sure as we'll talk, I believe that capital will now not just come into the few sectors that it used to come in to play the Indian demographics, but in a wider set of sectors as people are getting more comfortable on just India as an economy and the Indian government and its seriousness to reforms. Coming back to what you said, I think this year-to-date, M&A has been about $170 billion in India, which is about 20% of the Asia-Pac M&A. I agree that one of the largest deals there has been HDFC Bank, which we've been an advisor to. But I think that's good. I think what this is demonstrating, whether it's the HDFC deal or Adani buying Holcim, it's demonstrating that Indian corporate is back and active. Through the NCLT process, we saw basically balance sheets of banks and corporates getting cleaned up, and all that Zia and I would go to if we had any sell-side opportunities was to basically private equity or foreign strategics. And a country which aspires to be $5 trillion, $7.5 trillion in size must have a dynamic Indian corporate sector. And I see what's happening as a trend very heartening. And I hope more of it happens as global multinationals will withdraw from countries as growth slows down. I want Indian corporates and Indian corporate sector to and Indian private equity to come in and buy some of these assets because they can actually have a much longer
right Slightly scratchy line there from Manisha, but the biggest takeaway that I got from Manisha also is there private equity has to participate more, and in fact, Zia, and you'll agree with this, that private equity has kept the deal street ringing. And you have a keen eye on the big conglomerates, the corporates in the country, Zia. Now, apart from the top 4 or 5 corporates that we see and the conglomerates with deep pockets and the intensity to buy out and also get bigger, beyond that, how is the rest of the scenario looking in terms of sentiment, animal spirits to do acquisitions and also to grow their businesses when it comes to greenfield, brownfield expansion?
So I think domestic corporate sentiments absent strategic buys are still mildly positive. I think people are still wanting to create a situation where they have a war chest, if necessary. A lot of the smaller ones and not the big boys, the Indian big boys we're talking about, don't want anything called IBC coming close to them. So they're deleveraging as much as possible. I think private equity has raised so much dry powder globally last year and this year that they need to deploy. So I truly believe that if there are opportunities here, you will see a lot of competitive bidding. I'm seeing the deals that are flashing on your screen. The Shell one, for example, was Shell's first acquisition into renewables in South Asia. We acted for Shell, but that shows their commitment. BlackRock came into renewables into Tata Power, but these are still FDIs coming in. The domestic merger market, I think Manisha will have more of a sense. I see it not happening, but I think HDFC was an exception, if you like. Now, when Adani has bought Holcim, if Aditya Birla can find some local acquisitions, they might well go for them. So you will see domestic deals, but I still think the FDI coming in and the deals from outside will probably outweigh, simply because the sentiment is India is the place to invest in. And frankly, all we have to do is to make it a little easier for everybody.
Right. So Manisha is back with us. Manisha, you were raising a point of private equity participation, and Zia also said that a larger part of heavy lifting on the deal street would be done by the investors, especially foreign money. But right now is the time, Manisha, when most of the global funds really allocate their next year's funding for and also geographically as well as segment-wise take a decision. How are you seeing the investors really looking at India? And do you think that the money will be a little more skewed because of the interest rate hike that we are seeing globally?
Thanks, Nisha. I think foreign capital will be dominated by private equity. I don't see strategics coming in such large deals or transactions just because of what's happening globally in terms of the slowdown, etc. Private equity in 2021, as you know, private equity plus VC put in about $75–80 billion of capital to work in India. In the current year, they put in $40 billion year, as Zia started off by saying, which has seen unbelievable disruption in terms of Ukraine supply chain, Fed rates increase, etc. So I think despite that, you saw $40 billion of capital coming in, which is substantial. They will continue to put capital to work. And as I said before, they will not just put capital to work in consumer and pharma sector, but because of the reforms that we are seeing, the structural reforms that we are seeing, I'm seeing more capital come into infrastructure, renewables, etc. Zia mentioned the Tata BlackRock deal. You saw a fund like CPPIB, which traditionally doesn't take control stake, buy a majority stake in Renew. So I think it'll be a more diversified spread. But I think you raised a very valid point, which is that the leverage market is tight. And that's probably why you saw lesser capital being put to work in India and from the private equity in this year. And if that continues in the next year, then we probably won't see deals of the scale that we saw in terms of hits away at Carlyle, etc., which was like $3–5 billion. Probably see fewer of them. But the positive on the other side is the fact that you're seeing funds come into infrastructure, roads, ports, transmission, which was very much needed. We just couldn't have domestic capital funded the enormous infrastructure need for India. And I think with the digitization of the logistics sector, you're now seeing a lot of foreign capital coming there. So a bit of a mixed bag. We'll see how 23 plays out. Leverage is, of course, the biggest play here, which we need to see more of coming if you want to see private equity play larger deals.
Right. So, Manisha, you actually mentioned a bunch of the sectors which are really keenly watched out by the private equity, and there is enough interest. Infrastructure is something that India needs to grow in, and there the foreign investors are really very keen. On the other hand, logistics, because of the boost that was given by GST, and the sectors of the future like renewable energy. These have really been on top of the agenda for the investors, along with our financial services. Zia, you have any insights on the sectors we should watch out for, which are attracting most amount of interest so far undiscovered by the investor community for the next year?
So I agree with Manisha. I think the spread is going to be much larger in terms of sectors. Traditional favorites have been, pharma, healthcare, etc., simply because of the consumer dynamics. But I think that India is courting the large patient infrastructure capital. And that you will see a lot with the sovereign funds, both from the Middle East and from Canada and hopefully other jurisdictions, Korea. I think that government wants to show investment in infrastructure of all kinds. You're seeing green hydro, you're seeing renewables, you're seeing roads, assets, which are, going gangbusters in terms of M&A, airports. The government realizes that to grow into the economy that it has to, it needs the infrastructure. And the most patient capital is sovereign wealth funds. So I think they'll go for that first. And then KKR, Warburg, and all the other big boys, Carlyle, etc., Brookfield, are all raising funds which are for infrastructure. Yes. And so they will have to allocate it to this sector. So I think the one big change I see is that there'll be more infrastructure investment than before by PE. And probably the startups and the fintechs, that may slow down a bit until life settles for them and it starts again.
Right. And Zia, you made a very important point. The annuity-based kind of funding or a long-haul funding is what is required for infrastructure. And in the absence of cheap capital that were to come, but the debt market is looking now largely expensive and also doesn't have the horizon of 20-25 years of debt for infrastructure. For that, sovereign wealth funds as well as some of the private equity can now play a very big role. Also because of the comfort of REITs and InvITs as a category being created so well, where they can deleverage, roll it out, and then put money back into newer funds. So that's a very interesting and important point and a big takeaway for the next year. But we'll slip into a break. We have lots more to discuss, especially on the valuation dynamics. Big mismatch there. Is that going to be creating a big hurdle on the deal street coming year? Stay tuned to Big Deal. Welcome back. You're watching Big Deal, and we are trying to gauge the picking up trends for the deal street for the coming year. Now, Manisha, we were talking about the various aspects, but everything can come to a standstill if there is a valuation mismatch. Now, I speak to a lot of my private equity friends, and they do say that they are now entering into a time where their fund will be required, and overall the sentiment is down. So they are trying to do some value buying. Is that going to be possible? You have a keen eye on some of the big corporates and the expectations from there. Is deal closure going to be a difficult bit?
So, Nisha, I think there was some froth in the market last year, especially in certain sectors such as tech, where valuations were you just had to have a business idea and you could basically go out and raise capital. I think those days are gone. Having said that, as you know, India is a growth market. And valuations typically have tended to be rich, and I don't see that falling off the cliff, because adjusted for growth, valuations look attractive in sectors such as consumer, retail, pharma, etc. So I don't think there is, when you say value buying, is our valuation going to fall off 50-60%? I don't think so. Public markets are still very much open. You saw the success of an IPO like BKG Foods recently. even in challenging times like this, India has raised about $6 billion through the IPO market. So the capital markets are willing to pay the valuation. I think some correction will be there from last year in some sectors where there was too much froth. But given the long-term growth trajectory, we're the only country which offers 6 to 7% GDP growth. 400 million Indians, in the urban India looking to buy consumer products. We all know the demographics and the dynamics. So I don't see us falling off the cliff, but I see better deals and better outcomes than last year, which is good. And I see consolidation in the sector with some of the companies which had just raised easy capital, which is good because I think the big will get bigger, stronger, have better balance sheets, and will be able to sustain growth in the longer term through which investors will make money.
Right. And Zia, do you concur with that? And do you think that there will be another round of correction when it comes to valuation expectations? How are you seeing this particular space? And are the promoters especially, are they willing to sell their company cheaper?
It's, company by company, the way I see it, because there's so much dry capital and there's a need to deploy. The promoters are correctly having a bid process. The minute you have a bid process, everybody gets into a frenzy. I want to win, I want to win. So although the valuation mismatch exists and has been corrected to some extent, I think the bid process is still enabling the promoters to offer the deal up without thinking that they have completely undersold themselves. So it depends on the sector, it depends on, how many other players there are in this field, it depends on whether you're buying an asset to make it a platform. So I think despite the correction, the valuations show, just from the deal flows that we are seeing, that deals are happening.
All right, deals happening, and yes, good assets getting picked up still aggressively is what the consensus is. But Zia, what about the IPO market? And you did mention earlier that the startup ecosystem will find it difficult for some time on the deal street. What is your view on the IPOs from that particular digital space coming to the market with the kind of lessons that we have learned, first from the IPO last year and second from the lock-in periods getting over for the listed companies?
So I'm not so optimistic about the IPO market. I think we'll see much fewer deals. We'll have to see many more quality deals. I think a lot of the deals that have come to the market have started earlier. And I'm not quite sure whether the price discovery for them is the same as the merchant bankers had offered last year. So definitely see a drop in the IPOs. In terms of the fintech and startup world, I think, I don't think it will be a very dry winter. But there, I think valuations will get reset. There, I think the concerns for the existing investors will be that they don't want the embarrassment of down rounds. So we'll have to see how that plays out.
And Manisha, do you think that consolidation by death is also a possibility, or consolidating and merging for survival is going to be one theme that could pick up?
Definitely. I think consolidation within the sector, consolidation by the large caps. I think the large caps will be spoiled for choice. You saw the likes of Reliance, Tata's go out there and make value buys in the last 12 to 18 months. You'll see them do more. And I think that's a good thing because capital access, as I said before, will, especially in the tech sector, come largely to the large players, given just what's happening globally in the sector in terms of correction and in India too. And I agree with Zia that, also ran ideas will not make it to the IPO market. IPO market, only very strong ideas with strong business models and an ability to demonstrate that they can make money and have positive EBITDAs are the ones that will get to the market. So you will see consolidation in the sector. You may see some just die out who don't have any unique idea or unique customers or any differentiation. And some you will see consolidate with their larger players, which, as I said before, is a very good outcome because for the next 5 to 10 years, we need well-capitalized companies which can penetrate the country deeper and stronger.
Right. And finally, to end the show, my favorite, topic with both of you, Zia Mody, the gender diversity in the industry. How do you view it now with the ESG thrust? Is that picking up? And I must state that when we promote this show, a lot of male bankers did reach out and said, bring gender diversity on your panel.
I hope you have not called us just because we're women, Nisha. I'm sure you have not.
Not at all, Zia. You know
I
that.
think that, gender diversity remains a struggle. I think that it's up to men more than women. Women are already converted to understand the value of talent, be it men or women. And there is a shortage of talent. And so I see that as a big plus for retaining women. I think the trend has to continue and grow. And I think organizations have become much more aware of the fact that retaining talent, regardless of gender, is imperative. And of course, women are normally smarter than men.
Okay, Zia, I think you've been very vocal on this. But I was trying to tell you that, the iBankers were saying that we should have some more men on the panel and cannot have
No,
like
don't
a
do
fully
that.
woman. I said, why not?
You don't have to do that.
Manisha, any final thoughts? Though I would look for gender neutrality, and that's where we need to reach finally. Manisha, final thoughts on that?
Yeah, I think, look, Misha, lots needs to be done. I think what's really good is the talent hunt that's happening, especially in the IT sector. So a lot of women are upskilling, reskilling, entering the workforce. And I'm really happy about that because, women talent is being valued. Plus, the whole work from home during COVID has made people realize that flexi hours for women, etc., can be given, can be granted, and people can work on that basis. Lot more needs to be done, but I think from the top, whether it's at the boards where you're seeing now more than one woman. I am on boards where you see 2 women, which is really heartening. Through organizations, you're seeing more and more organizations wanting to retain women talent. I think enough are entering, as Zia said, there are enough smart women out there who enter, but because of our patriarchal society, tend to leave. So I think a lot more is being done, but a lot more needs to be done.
All right, but I leave the onus lies now with women in top position like yourself to really bring that into the system as well. So I'll leave at that. But a big takeaway coming: cautious on the deal street, but deal street is expected to remain buoyant even in the next year. Thank you so much, Zia, as well as Manisha, for joining us. And with that, it's a wrap on Big Deal. Thanks so much.